Good morning, traders. This is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for July 23rd, 2017. Now, before I get into this week's video, I have to mention that you should take our trial. It's $1 for 10 days, so then you can get all the analysis to your desktop and you can get it to your mobile application or your mobile devices. Make sure that when you try ForexAnalytix, you also download the app on the App Store or Google Play Store, and then you get all of our push notifications and all of our analysis and breaking news right to your mobile device. Okay, and so this is what it actually looks like when it's on your desktop. Now, before we actually go into the analysis, let's talk about and the actual analysis of the pairs. Let's talk a little bit about what happened this week with the euro dollar. So this week the ECB met. And what was really interesting about Thursday is after the ECB met and Mario Draghi spoke during his press conference, he pretty much threw everything at the market to try to subdue the euro dollar bullishness. And the scary thing about the market is it wasn't having it. You can see on Thursday the euro dollar continued to break higher, and then on Friday we continued higher. And closing at our highest levels or near our highest levels of the week. Now, the scary thing about the euro is the euro dollar actually looks like it has further to go. Now, last week I thought the dollar may stop, and I thought the ECB might be able to put the brakes on the euro dollar, which in essence would stall the dollar index downside. But really, he was unable to, and the euro dollar continued higher, and it's starting to squeeze, or it's continuing to squeeze all those traders that are wrong-footed. Because if you think about the price action, or excuse me, yeah, you can actually think about the price action of like the dollar index, and let's take a look at the dollar, and then I'm going to come back to the euro dollar. And remember, out of the dollar index, the euro dollar has, I think it's about 56% weighting. So the dollar index is very heavily weighted in the euro. But if you think about the dollar and going into the beginning of the year, the market was extremely bullish the dollar. And, there's a couple key reasons. The Federal Reserve was raising rates. No other central bank was. And you also had, well, most central banks weren't anyway. Then you had a new president, which the market was very optimistic that our new president was going to be able to push a lot of legislation through that could really help move the U.S. economy further, faster. And unfortunately, that hasn't happened. And at the same time, we're seeing other central banks starting to play catch up with monetary policy to the Federal Reserve. So we might be at a cycle period where the Fed stops raising rates, and this week when the Fed meets, the Fed's not expected to raise rates, and we're going to find out if the Fed will even raise rates anymore going into the end of the year, or what the chances are, and if they're even less as we go into the rest of 2017, the dollar could have further to fall. And I'm specifically showing you the weekly chart because if you imagine at the beginning of the year all these traders buying this breakout in the dollar up here, now we're getting this reversal below channel support. We broke below a key fib level, the 78% retracement. And if you look at relative strength on a weekly basis, we're breaking down. And if you look back in history, we have further to go if the dollar really wants to. And so if you think about the market being caught wrong-footed along the dollar at the beginning of the year, will we or could we trade down towards 92 in the dollar index, or maybe even lower towards 90? I think it's entirely possible. And then you have to imagine, where does that take the euro dollar, and how far can it go? Because if I look at the euro dollar chart, the euro dollar chart is approaching the 38% retracement. As you can see, it's also on the ForexAnalytix platform. But if you have to really look back to 2010, to the lows that were posted back here in 2010, that spike low comes in at 118.65. And to me, it seems entirely possible that we could take all the stops, meaning all the people that are short or people that may have some buy stops above 117, 117.50, and we could take it all the way to 118 and a half, maybe even 119 before it's all said and done. The euro dollar is pretty overbought. I mean, if you look on a daily chart, it is getting to an overbought situation where relative strength could really get up there, but we're not quite there yet. And so if you're trying to buy the dollar as a result, you got to be careful. I mean, I don't see any reason at this point in time for the dollar to reverse, but also keep in mind that this week we do have the FOMC, and that comes in on Wednesday. And if we come away from the FOMC meeting on Wednesday that the Fed may indeed, there's a higher chance that the Fed may continue to raise rates going into the end of the year, then the dollar could find its footing. But if not, the dollar may be under pressure this week as well, as we break a lot of key technical areas. Now, there's one other outlier that I'd like to talk about. And if you look at the stock market and you look at where like the S&P is, and the S&P is extremely bullish. I mean, you can see it where we continue to rally, and if you look at the candlestick analysis, I mean, we have the potential of an evening star setting up where the S&P might come back down and test some of these breakout points, and maybe even come down towards 2400. After rallying the all-time highs, it's entirely possible that we might see a little bit of a pullback, especially in the summer months. And here we are mid-July, we might get a little profit taking. But also, if you look at the German DAX, the German DAX also is breaking some critical support. You can see it here. Here's the German DAX breaking through support. And by the way, on ForexAnalytix, we've noted that, several weeks back we had this ascending wedge and we've broken lower. We held a lot of resistance in the German DAX, and especially with the euro so strong, it's weighing on the export heavy German index. But if the global stock markets start to pull back a little bit, how does the dollar react? And we don't know. It's hard to make that judgment call without seeing many pullbacks in the stock market over the course of the last however many years. It's hard to know exactly how the dollar is going to react. But one last chart I wanted to bring to your attention regarding the stock market is, if you look at volatility closed at historic lows. And so volatility can bounce at any time from these levels, and we bounce towards 11, 12, 13, 14 in volatility. That means that the stock markets are probably going to be under pressure as a result of that. Again, how does the dollar react? I'm not too sure, but I will tell you that if you look at like these yen pairs, the dollar yen, for example, and I'm going to take you to it on ForexAnalytix here, the dollar yen is below the 200-day moving average, and so the dollar yen looks a little heavy. I'll take you over to let's go over to the euro yen. Okay, the euro yen is stalling around this 50% retracement. And you can see these long wicks that we're developing here, and you take a look at some of the other yen pairs. Like there's like the Canadian yen, for example. We're consolidating right near these highs, and we're unable to break out. The New Zealand yen right up against resistance. The Aussie yen has shown a pretty big reversal after looking like it was breaking out a couple of days back. We may have actually posted a false breakout here in the Aussie yen. So these yen pairs may come down, meaning the yen may strengthen if the stock market comes down, but the jury's still out how the dollar is going to react. But I will tell you that the dollar, as I've shown you earlier, the dollar is under pressure. and it is in breakdown territory, so that we have to be careful with. Now, there's other things happening this week. The main event is going to be on Wednesday for the FOMC, but we do have GDP in the U.S. late in the week on Monday morning. So Monday morning, early morning in Europe, there's a lot of PMIs coming out that could influence the euro, therefore the dollar index. So even though it's summer, there are still things happening here, and things that you've got to be aware of, because we are at such critical areas, especially in the dollar and where the equity markets stand. So with that being said, guys and gals, I want to wish you a lot of luck this week, and it should be a fairly busy week in the market for a summer week. So make sure you keep an eye on exactly what the dollar is doing and what the S&P and the volatility is doing as well. So good luck this week. Thank you guys and gals for listening in. My name is Blake Morrow with ForexAnalytix, and make sure that you like this video. Click that little thumb button, and make sure you subscribe to this YouTube channel. So thank you guys and gals for listening in. Have a great trading week.